Don't do it, guys. Don't place trades based on what you see here. Please consult your own financial advisors and do your own due diligence. All right, with that said, let's go. As usual, it is not Saturday. It is not September 15th, 2018, but I'm making the video 1:40 a.m. on Sunday morning, 9/16/2018. No new trade ideas, unfortunately, but I'm just reflecting on how things are unfolding in a macroeconomic sense and what's happening around the globe in relation to the metals, since as you know, I'm very largely invested into precious metals at the moment. And what I'm looking at is currencies around the world right now, and I'm seeing that the dollar has been crushing everything. Um, and so what this scenario reminds me of a little bit is 2000, the year 2000, 1999, 1998. There's gradual rate hikes and of the Fed, and the US dollar is strong, US market is strong, the data seems unbeatable from the US, and everything else is suffering, all the Eastern European countries, everywhere around the globe, Russia, whatever, emerging markets basically on a downturn, which is kind of what we're seeing right now. Emerging markets suffering, US market up, data great in the US, everywhere else. Any country that holds any dollar denominated debt is suffering. The countries are going out of control. It looks right now, forget Venezuela, forget all these other countries like Turkey right now, they're trying to fight inflation as well. I just heard the news right here that they had this massive rate hike trying to stave off 17 point something percent inflation, which is pretty large. And they're trying to stop it. We'll see if it helps, but this is what happens. Um, this is what happens. So we'll see. We'll see how long this rate cycle lasts. Whether it's going to have an ending similar to the one in 2001 with this some kind of a massive bubble. I mean, we do have bubbles everywhere. We got bubbles. You can call the stock market a bit of a bubble, if depending on how you look at it. You can call the real estate. You can call it a tiny bubble. You can say it's peaking out for right now. You can say that the bond market it's already peaked out in its bubble and it's on its way down, and now having just a minor correction on the way down, an upward correction, but it's going to resume its downfall. You could say, you know, that a lot of things are in bubbles. Um, Small business, consumer, and corporate confidence, like stock buybacks, are in, we could say it's in a bubble. Everything, but emerging markets are definitely not at the moment in a bubble. That's for sure. So I'm actually looking to I'm thinking maybe I should buy some more China, maybe go big on China FXI right here. It was down 1% on Friday. Let's pull up the 5-year chart here. Well, I guess it still looks a little bit elevated. But what I'm looking for, oh, and another thing about that is precious metals are also depressed during the year 99, 2000. They were very depressed. They had been in the lowest prices there in decades, and we're heading there. I mean, I think silver at least is about to touch the 2000. If it keeps going another $3 or $4, it's going to touch the 2008 bottom. I mean, that's really low. That's really low. I mean, factor for inflation, basically, we're at the bottom right now, depending on how you want to factor in inflation, what numbers you want to use. But certainly, relative to the stock market, it's way down, way down. Relative to the housing, it's way down. Relative to bonds, way down. Relative to everything else, basically, besides maybe the US dollar and some other currencies, besides currencies, it's way down. Relative to assets, it's way down. It's probably, maybe not gold, but silver. Well, I guess you can't really consider, I don't know if you consider silver an asset, but maybe it's just a commodity, but it's compared to relative to assets, it's real way down. So what I'm thinking here, because I've been thinking today while I was at work, I'm thinking that we might be near some capitulation. We might see another big downward move in silver, a flush out that's going to coincide with the emerging market flush out, Australia flush out. Actually, let's see what Australia is. What was it? EWA maybe? Yeah. Let's see what this looks like. Oh, yeah. Australia hasn't even started to drop. Just a little bit. Compared to China is nothing. Let's see this. Oops, not that. EMM, I think. Was it? No, EEM. Yep. EM ETF emerging market. Let's see the 5-year chart here. Yeah, it looks like a little bit like China's rollover. So I'm thinking a flush out all the way down to these lows here with a very sharp move before it starts reversing. So I'm looking for at least the 30s, maybe even high 20s right here. It's just the way things are going, right? Because I don't think that this train can be turned around this quick, on a dime. So the move has clearly started, right? I mean, this upward trend is clearly broken. So I'm thinking that it's going to continue and it's going to accelerate. As they say, at first it happens slowly and then it happens quickly. But you know what? I'm going to just live through it. I'm going to stay through it. I'm gonna keep my investments just in case I'm wrong. I don't want to be out of this market. I don't want to be out of emerging markets when they do start turning up. I just might accumulate more. That's what I'm thinking. All right, I'm babbling too much. Basically, I'm looking for these trends to continue. U.S. market up higher. I'm thinking precious metals and the dollar up higher, precious metals and emerging market lower into a final flush out coming up. That's what I'm thinking. Am I wrong? We'll see in the coming months. But I'm not gonna trade differently. I'm just gonna stick to what I've been doing. So I'm tracking it. I want to see how I'm performing through all kinds of macroeconomic conditions. All right, that's it for now. Okay, peace.